Good afternoon to every one of you guys. There is just the admin part quickly of the for the session. There is an attendance register that has been put on the browser, or sorry, on the meeting chat box. If you can complete that for us, as well as there is an evaluation questionnaire that we would like you to complete. And then today we're going to deal with question 2, and then question 2 is on Untitled Letter 102, FAC3702 Untitled Letter 102. And it's a fairly simple and straightforward question. And it shouldn't take us, I think, more than what the allocated time is. And then tomorrow we'll then also deal with another question as well. Okay. So what I will do is, in order to also save time, the idea, or what I would like you to do is, the assumption is that you have read already what is contained in the scenario, and now you fully understand, right? So what I'll do is, I'm not going to do everything for you, but I'll do it in terms of, I think, mostly focusing on the calculations for you. Okay. So now what we assume is, we're going to assume that you've read the scenario, you've understood what is happening in the scenario. But as we do the suggested solution, or as we unpack the required, then I will also then try to some extent to some explanation that, okay. Now, what I'll do is I will just share that the template that I'll be doing the suggested solution on. But if you need a detailed solution, it is available in the tutorial later. Fine. Yeah. So if you read in question, I'll just put perhaps the required in the meantime, so that at least you're able to follow in terms of what it is that I. Okay. So your required, sorry. So your required is up currently, and you have about, I think, about 4 or 5 requires. It's fine. Okay. So required 1. Okay. I will ask Claudine to upload the evaluation questionnaire link to you guys just now, as well as the attendance register, because I see some of you are asking that. So required 1 says that you need to calculate, right, the impairment. So the keyword here is to calculate, right, not do a disclosure, not whatever. And then they say if any. So we need to do a test, right, for the wire patent in the books of Koi Limited for the year ended 31st of December 2011. So that's the financial year end. And then they tell you this in accordance to IS 36 as well as IS 38, because it relates to a patent. And then I think what's very important is that you need to show all your calculations, or even your input data on the financial calculator, right? Because that's why they're going to be marking, fine? And then round off them are marked your nearest right. Fine. Now this one is easy, okay? Because there is no specific way, or there's no specific framework in terms of how you answer, but there is like a common statement. When you need to do the impairment calculation, that is your recoverable amount is the higher of that and that, but we'll get to that. Then the second part is, so the information that you have in number 1, you will now need to disclose the impairment loss note in the notes to the annual financial statements of Koi, and they're only in accordance to IS 36 of impairment asset. That one you can go and look into the solution, because that one is the narrative part. So what we'll do is, all the calculations that we've derived thus far, and also in terms of the background as to how it came about, that was sitting in it, we had to impair our asset or our patent. Okay. Also, please take note of those following as well. And then the other one is you will need to calculate, right, your total cost of this patent, which we need to capitalize in the statement of financial position, right? So we're going to do that. But in order for us to be able to get there, or what I did for completeness purposes, is to also see how much of the amount, if we were asked now to indicate what the expense was, how much the amount is that you would have to expense to the research or for the research cost, okay? And then you also need to show all your calculations, fine. And then number 4, you need to disclose that they say only notes to the financial statements, annual financial statements for the year ended 31st December 11, according to the requirements of IAS 38 only. So what they're looking here is they're looking for an intangible note in accordance to IAS 38 requirements, right? So they're not looking for the PPE note. But if you read the scenario, you'll see you will see that there is part of a component of PPE that is here. I think, where am I now? What am I doing now? When I question 2. Okay, I'll get back to you later. So there is a part, or there is a component that also relates to PPE. So I think that's why the question here, in this case, is very specific. That's it, in saying that you only need to do in terms of the intangible assets, right? So no accounting policies are required, and then you no comparative information, or ignore comparative information, ignore VAT and any tax implications. Okay, they're making things much easier for us. Now you would have asserted in the scenario that there was an item that came from intangible asset, and then now would have been or should have been transferred into an IFRS 5 or into a non-current asset held for investment sort of type of item, right? And then there's a reason why in number 5, they're asking then for that specific note. We already know, so you would already have had the amounts as to what is that amount that now needs to be transferred into or what is the amount that you need to recognize this asset now into your IFRS 5 requirements, right? So either you're carrying the lower of the carrying amount or the fair value, yeah, between the two. Okay. Fair value less cost to sell. Okay. Now, okay, I think that's way. And now we're going to attempt. Sorry, let's go up quickly. So now we're going to attempt and answer now all those 5 requires. So you had an option of doing them do number 1 first, do number 2, do number 3, and then do number 4 and so forth. Or you can do number 1 with the notes, or you can do number 3 with the notes, or you can do number, yeah. So you could have done number 1 with note 4. With the required 4, we could have done number 3 with number 4 and number 5, whichever way you're going to do it. But let's do them individually for now. Okay. So I'm going to share my template with you quickly. Okay, my template. Here's the template. Okay. So in front of you, here is a template that I have. You do not have to, in the exam, you do not need to stick to what I have in here, because remember, I've already read the question already, and I know what's happening in the question, right? So in your case, it might be a different issue. So you don't have to do it the same way that I've done it. Fine. Now, we know what the history is, that we bought an asset which is a patent in this regard, whereas in 2005. And then you also know that our year end in the current year, so our year end in the current year is 31st of December 2011. So 31st December 2011. I'm just organizing my things so that I understand what's going on. So this is what you would have done it as far as the your required one is concerned, right? And then, is it freezing now? Okay, let me just open that up again. Close that. Just trying to open the document quickly. Okay. Okay, so obviously these would have been then your notes that you would have to do as required in the scenario, and then this section then would have been your cost to that you will capitalize, but you're also going to do what the research component is. Okay, and then here this would have been then your PPE note or your intangible note, but now we'll only do the intangible note as required. Fine. Okay, there you go. So this question, if we had additional information in this question, we could have been able to do what the deferred tax calculation would have been, and then also in terms of what would we disclose in the deferred tax. But however, the information that we have in here is not sufficient. So it's always good to, when you do a question, that's to think about the complete picture in terms of what they would have asked for. Now we're going to read. You are going to read in your individual questions, and I'm going to populate here the solution as we read along. Right. Now, just want to see. Let's go back to the scenario. Okay. So the background is you've got a 31st year end. The company is Koiko Limited, and then they do manufacturing of batteries for motor vehicles. Now, on the 1st of January 2005, they bought a patent, right, for 2.8 million. Okay, so we know that the cost was 2.8 million to 3. Okay, because we've read now this scenario, we understand what's happening. Fine, but now over and above what they incurred as the let's say now the purchase price, there was also cost that were necessary in having this patent now with us, which means that they've incurred legal fees, but they also incurred what consulting fees. So those are necessary costs, or those are directly attributable costs to the patent, right? So you're going to say we add those costs, 47,000 plus 23,000. Okay, so now it gives us how much? 70,000 altogether. So our cost now that we would have recognized in our books as far as this asset or patent is concerned would have been 2.87 million, right? Fine. Now we know that this asset or this patent has a useful life of 10 years, and then there is also no residual value. So we're not, according to this, we're not expected to get anything in after the expiry of 10 years. So with this, we can then calculate in terms of how much our depreciation is. So there is the cost, and then the useful life is 10 years. Therefore, our depreciation per annum would have been 287, right? Fine. Now, we are sitting in, so I've been speaking. So we are sitting in 31st December 2011, right? Fine. But now we bought the item in the 1st of January 2011, right? Meaning that from January 2005 up until the beginning of the current year, we would have had the patent for how long? Think about 6 years. So it's 1, 2, 3, 4, 5, 6. So we would have had the patent for 6 years, meaning that we would have then wrote off accumulated depreciation for 6 years, right? Okay. So there is a depreciation for year 1, year 2, year 3, year 4, year 5, year 6, right? So your accumulated depreciation up until the beginning of 2011 financial year, or up until the end of 2011 financial year, would have been 1722000, right? Fine. Meaning that now I have the cost, right? The cost in total was 2878 is, and then my accumulated depreciation for the period would have been 172. right? Then it means that we have a carrying amount. Then it means that at the beginning of the year, we have a carrying amount of 114,800, right? I think we're still together. I think we're still together as far. Okay. And then, so we move on now to read in the current year what happened in the current year. Fine. So in the current year, the question is saying, let me go to the question. So in the current year, the question is saying that, however, during the current year, there were numerous customer complaints about defective batteries. I'm reading now in paragraph 2 of the scenario, right? And then they've done investigation, and then it was discovered that there is a defect present in some batches of the batteries already sold to customers, right? And then as a result of this, we had to do a recall, and then obviously the recall, with the recall, they now have to replace the customer free of charge with the new ones. Fine. So in this regard, sales were impacted. And then there was a decrease in revenue or in sales due to now customer being not satisfied about this whole thing. Fine. Now, what they're saying is now we estimate that now the fair value or this patent now is worth or is valued at sorry, to be only 850, right? Okay, and then legal and other administration fees to sell the patent was estimated to amount to 60,000. So immediately when I read paragraph 2, without even going to paragraph 3, then to me it already speaking about impairment. So we need to do an impairment test here somewhere, somehow, right? I'm trying to say quickly. Someone is saying, "Can you do this, Carl, quickly?" Yes. So that's fine. Whatever works for you, because if you look at it here, we actually get to the same. amount. But I was just trying to show or do to do a display in terms of how you actually get to 172. So whatever that's quicker for you, but it just ensure that you actually show your step. But now in this case, remember there is no unbroken period. So your calc what you've done there should be fine, unless if there was a broken period in between. So yeah, there's no really hard and fast rule in terms of how you need to do it. Okay, fine. Now, so to me, that statement tells me already that there is somewhere, somehow, an impairment that we need to do, right? So now what we need to do is we need to determine as to what is the amount that we need to impair this asset if we need to do it at all, right? Fine. So we know that our formula for impairment would then be, it's going to be a carrying amount less your recoverable amount. Fine. Now, we don't have the carrying amount as yet for 30th or 31st December 2011. We need to determine that, right? But then we know that the depreciation remained the same throughout, right? So what we can do is, we know that to say the carrying amount for this year would have been that, and then you less the depreciation per annum, then it gives you 861 as your carrying amount at the end of 31st December 2011. Fine. Now, in terms of our impairment, we have the first part, your carrying amount. Fine. Now we need the recoverable amount. Fine. Now your recoverable amount, we'll need to determine that based on the information that is given. Right. Now your recoverable amount, you would remember that, or let me ask you, how do we determine the recoverable amount? There's only two things. How do we determine the recoverable amount? It's only two things that we have. It's the higher of, it's the higher of, going to be the higher of your fair value less cost to sell, or your value in use. Right? So we're going to say we need to, so our recoverable amount, you need to write it in the exam. The recoverable amount is, okay, recoverable amounts So we say higher of, number one, your fair value less cost to sell, or your value in use, Okay, you can't just look at the scenario and then decide which one you're going to use. You must tell the market that is the fair value is the higher of, fair value less cost to sell, right? Okay. Now we already have the fair value less cost to sell, right? Because they said the fair value was 850, 1, 2, 3, and then the estimated administration or legal and administration and other administration fees to sell the patent was estimated to be 60. So you say less 60,000. Okay, and then that is our fair value less cost to sell. Now we have an issue here that now we don't have the fair value, we don't have the value in use. So we'll need to determine the value in use. Okay, so we say our value in use has been given to say the expected future net cash inflows to be derived from the use of the patent was estimated to be 320 for the year ended, which is 31st of December 2012. Fine. Now you're going to use this up until 2014. Fine. Now they give you how much are those cash flows per annum are going to increase. Okay. Now you then need to say, if I have future net cash flows of 320 today, and they're expected to increase at 10% per annum for the next 2 years, right? Then how much do I have today? So what is your net present value? So we know what is the future cash flows, right? Oh, sorry, I'm not doing that. So we know what that our future cash flow is, right? So year 1, year 2, and then year 3, right? Fine. Now we know in year 1 we're going to say we have only 320,000. Sorry, and then year 2 we know that this will increase by 10%, right? Oh, sorry. Okay, what am I doing now? Okay, the same. Okay, and then in year 3, we know that that amount is going to increase by another 10%. Okay. That times 1.1. Okay, there we go. Fine. So those are our future. Those are our net cash flows now. Fine. Now we know that the interest rate that we've been given is, I think it's 15%, and then that is in I think that is in page number 17 of your document. Fine. So in page number 17, under additional information point 3, they give you a pre-tax discount. Right? Pre-tax discount rate of 15% is considered to be appropriate. So the trick is, if they give you a pre-tax discount that is after tax, you will need to then adjust it to be pre-tax, because these cash flows here, so the idea is, in between year 1, the tax rate might change. In year 2, the tax rate might change. In year 3, the tax rate might change. So that's why we're using a pre-tax rate. And so that we can eliminate that complexity within the calculation. So I pre-tax is going to be 15%, right? 15%, right? And then so obviously in the beginning, the cash flow is always going to be 0, and then you then calculate what your NPV is going to be, right? Okay. Now your NPV in this case, I think if I remember correctly, was 799,014, because I don't have a financial calculator in front of me now. So I think that was your NPV. Fine. Now it's very important that you actually show all your calculations, because in a case that that amount is incorrect, right? at least the marker is able to see as to what your thought process or your steps were in getting to that amount, right? So it's also important to reference as to where you actually got that amount. But I'm using Excel, so it's not that easy for me to reference. But now in your exam paper, you will then need to do that referencing, right? Now, so we said the recoverable amount is the higher of my fair value less cost to sell, which we've been given and then we calculated it already, or it can be the value in use. Now, in this case, the value in use is 799,014. Now, we'll then need to determine as to what is the impairment amount, right? So that's our highest of the fair value. Fine. Now, our impairment is now 61,986, right? Fine. So that's the amount now that you will need to use to impair this patent, right? Fine. Now, if you were asked to do a journal entry, right, for that impairment, so we would have debited, so say 31st of December 2011. So what we've done, we would have debited, would have said impairment loss, okay, and then the other entry would be the accumulated impairment loss. Okay, and then obviously you would have then debited that amount in your profit and loss, and then this one would have been in your statement of financial position, and then the amount would have been 61,986. Okay, and then 61,986. So it's always very easy to start with the easiest journal that you can remember, and then I think the rest then will follow social recognition of impairment. Okay. Yeah. Okay. Now, so we've done with the required one. Okay. Now, the second part of the that is what was required that is what was required regarding required one. But now the second part is what they were looking for you. They are saying that, right? Use your answer in one above and disclose the note. So you disclose the note, the impairment loss note in the notes to the annual financial statement, right? So that one, the narrative part thereof, we can actually look at in the solution because I think it's well documented in there. So basically, you would say how it came about that we actually have now this this impairment loss, meaning that there was a decline. There was there were defective sort of batteries now to replace the customer, and as a result, there was a reduction in sales. So, and then you will see in the impairment loss amounted to this much, and then you need to say how was the impairment loss calculated, right? Or the recoverable amount. So, recoverable amount would have been based on the value in use, and then as determined using the pre-tax rate, discount rate. You know, so that's basically it, and then you then indicate in terms of where then this impairment loss was included. So at this journal entry that we've done, we would have included this item or the journal of the loss in the P&L. So that's basically the narrative part that we include in the impairment loss. So, but then you can go into the note and then see what they actually try and document as the narrative part. Right? So we move to the second part. The second question was, let me go to the question quickly. The second question was, or before I think I move on, is there any questions perhaps? Okay, so what is asked? Can you choose either or? Okay. I don't understand what you mean in terms of choosing which recoverable method, because in how you get your recoverable amount is the higher of your value, your fair value less cost to sell, or your value in use. So I don't think I understand. I don't think I understand the question from in terms of you need to choose now which one. So obviously you're going to choose the highest because that's what the the requirement of the guiding principles are. Okay, so the next part was, so we've done number 2. So you need now to calculate, right, the total cost of the patent that we need to capitalize in the statement of financial position. So what we're looking at here, when we've done the research and then thereafter we've done the development, right, of the patent, they are now looking in terms of how much do we need to take in this amount, how much do we need to recognize or reflect in our financial position statement, sorry, in our statement of financial position as far as this internally generated patent or asset is concerned, right? So we go back to the question, sort of the scenario, and then see what is happening in the scenario. Fine. I already know what's happening in the scenario already. Fine. So let's do this. Fine. So I already know what's happening in the scenario. What I know is they started with this whole project, right, on the 1st of February 2011, right? I know that on the 31st of March 2011, research was completed. So it took them only 2 months to complete the research part. Okay, fine. Now, after the research was completed, I know that the development phase was completed on the 1st of August 2011. So meaning that it took them how many? 4 months to complete this development phase, meaning that the remainder of the year after the development was completed was 5 months. That's very important for you to know, because if you do not do this drawing or write down in terms of what were the steps or what happened, right? And then when what happened, what is the duration? You're not going to be able to do that split, right? Fine. Now we already understood as to what were the costs that were directly attributable in researching and in developing this project, or let's call it now this patent, right? We know we have salaries of 700,000, right? But now these salaries were incurred in the research as well as in the development, right? And not before or after that, right? They started incurring these costs from the 1st of February up until the 1st of August 2011, not after. So after, they didn't incur these costs because this project was completed, right? We already have a complete unit now. Fine. The same as consumables. The consumables of 100,000 relate only directly to this project that we have. So our project started 1st of February up until 1st of August. Now, what we also know is that, and then we'll get to that part, we know that we also bought machinery on the 1st of February, right, to assist with this project, right? So when we're done with this, with the researching and development of this patent, we're now going to use this machine now elsewhere, right? So we're saying that for the first 6 months, we're going to use it for this project, and then thereafter, we're going to use it then for something else, right? Meaning that now, if they ask you now to do PPE, then this specialized machinery, you would then have to consider it. You have to consider it then into your PPE in terms of I-16, okay? Fine. Now, let's start with the first one, the easy one first. Your salaries in total is 700,000. The scenario is telling you that these are incurred evenly, right? So what will be that cost per month if this is incurred evenly? I'm going to wait for an answer for this one. So if they say that all these costs were incurred evenly, salaries, so what would have been the cost that salaries were on a monthly basis in order to conclude or in order to do this project? What would be the monthly cost for salaries? What would be the monthly cost for salaries in this regard? Okay, so your research phase and your development phase. So your research phase and your development phase was only 6 months, right? Now, if you go back to the question, if I remember the question correctly, I think it speaks about, where can I find it now? It says the following costs directly relates to the patent, right? So these costs are not relating to anything else, but it relates to the patent, right? And it goes on to say research and development. Now, so how long did we do the research and development for this project? How long did you do the research and development for this project? Yes, we only did for 6 months. So it means that the duration of this project and then the time or the length of time where we paid these salaries was for 6 months. Yes, then it means that on a monthly basis, I would have then paid how much? 116,667. Fine. Now, remember for research phase, I only have 2 months. So we say that multiplied by 2. I think I have the 2 somewhere there. Okay, so that multiplied by 2 is going to give me how much relates to research component. And the same as here, I'm going to say this amount multiplied by 4 months, then it's going to give me how much it relates to the development phase, right? Because remember, the aim of the question is here, we want to see how much should be capitalized, so cost to capitalize. Right? This is the part that you want. But now I'm doing this part for you just in case in another question they ask you to do that part. So I want you to see the complete picture, right? So then we would have to apply the same principle as far as consumable is concerned, right? Consumables is going to be the same principle, right? And then we just apply the same principle, consumable, we just apply the same principle in, okay, it's not right. Is it right? Okay, no, it's right, it's right, it's right. Fine. Now, from this whole thing now, we've done the easy part, right? Now, the other part, which is, it's not so complex, it's principle. If you have the principle, you should get that right, right? Fine. So they bought, they bought a machine on the 1st of February, right? So this is a specialized machine. Now they bought this machine at a cost of 2 million. Right, fine. Okay, I think someone's asking a question. Yes, so in terms of so we'll get to the answer. So the development cost, that is the part that then you're going to be capitalizing in your statement of financial position to say that the take on cost for this patent is going to be this much. Remember, the research costs are expensed, right? And then the development costs are capitalized. That's going to be the value or the cost of the asset on the 1st of, what's the date? I don't know the date, or whatever the date is going to be, but the date should be on the 1st of, let's say, August 2011. That's going to be the cost. So that cost now will come from the development cost part. So what we do is, when we're done at the end getting what the figures are there, so we're going to do the journal entry to say what would have been debited in my income statement, what would have been credited in my income statement for the research part, what would have been debited in my income statement, in my statement of financial position for development, and then what would have been credited. So we'll get to that part later on the journal entry. Now let's first win the battle for depreciation. Why do we include depreciation in this regard? Fine. If you go back to your scenario said you bought this specialized machinery. The purchase cost of it was 2 million rand, right? On the 1st of February 2011. Fine. Now you only paid 1.1 million, right? Immediately, right? And then the outstanding balance is going to be settled at the end of November. All right, fine. Now you bought the machinery the 1st of February. the balance is going to be settled in 30th November 2011, which means you've got a period of 10 months to then settle the 900,000 remaining balance, right? So we know that at the end of 30th November 2011, we would have settled the 900,000, right? But that's not the case here, right? It means then that today the value of that 900,000 would have been less. So what we need to do is we must take the outstanding balance and then bring it today to say how much should I have to recognize in my books as far as that value is concerned, right? Because there is not in that 900,000 there is a financed component that is included in there. So we will need to take out that financed component, because that financed component is going to be interest, right? Okay, so you're going to do that by just now. Fine. So we know that the useful life is 5 years. The residual value was 300,000, and then this machine was available for use on the 1st of February 2011, right? Meaning that now, or the other part I missed is that initially this machinery was bought for the purpose of the development. Very important, right? And then thereafter for commercial purpose, for commercial production of the batteries, right? Okay. Fine. Now what we'll do is, okay, now we need to determine as to what is the depreciation amount. Just want to get to that quickly. Fine. Now we bought this item on the 1st of January, sorry, 1st of February 2011, right? So what did we pay for this amount? We paid 1.1 million, 123. That's what we paid, right? But now we're sitting with a problem here, because 900,000 we will pay it later, right? But remember we said that 900,000 has a financing component included in there, right? So we know at the end the remaining balance is 900,000, right? And then we know that I think our pre-tax rate is, I think, 15%, if I remember correctly. Just need to go down and check whether that's the case. 15%. Yeah, it's in number 3. Your pre-tax rate is 15. That's 15%. So now we need to, okay, so it's 15%, right? And then remember we said that the financing of this part, it only relates to 10 months, right? So you need to show your steps as well in terms of how you got to then the present. So what we're doing is that we're saying the 900,000 that you're going to pay after 10 months, what is the value of that today? And then we get 794,863. So that would be so this would then be what that 900,000 is today, right? Meaning that we would then recognize this item in our books for plus that. So you're going to add that amount. So that is what would have gone through to our books to recognize this part. Now, okay, fine. But now, remember, now we need to calculate as to what is then our depreciable amount, right? So we have a residual value of 300,000. Okay. I think before I move on, I just need to confirm. I'm doing it. Just need to. I just want to see if everyone is still with me thus far, or are there any questions? Okay, I think everyone is still with me thus far. Fine. Now we have a residual value of 300,000. Okay. Fine. Now it means that if we have our depreciable amount, right, we can then determine as to what is our depreciation per annum. So our depreciation per annum currently is 318,973. But then remember, this depreciation is only per annum, right? Fine. Now, if we go back to say that is our depreciation per annum, now we need to then say, in terms of what is then the depreciation per, let's say, per month, right? But now obviously the principle here is going to be different because this machinery, after you've done using this machinery, is now going to be used for other things else, right? So this machinery is not only limited for the use of this project, it goes over and above this specific project. So it's not going to be correct to then divide by 6 months, right? Because after we're done with this project, we're going to use it elsewhere again, right? So the cost then per month would have been 26,581, right? And then therefore we say how much is then going to be, can we do that and do that, and then how much is going to be, let me just focus on this one, right? So that would then be the cost that we then need to capitalize in let me actually include this one here as well. Okay, so that will then be the cost that we need to capitalize in our books, right? Now let's actually see how would then the journal entry would have looked like, right? So we will say the 1st of August 2011, right? We would have said we say internally generated, blah, blah, blah. Okay, I'm trying to think now, okay, let's start with the research. We'll say research costs. We're expensing that, and then we say under those research costs, we've got various costs. We've got your salaries, we've got your consumables, and we've got your depreciation as well, depreciation, and then obviously that will go to your P&L because the P&L item, right? And then this will go to your, I think, P&L as well, item. Let's just confirm. Okay, and then your cost here then would have been 319,829 in total, 319,829. And then obviously then here you'll have all your individual cost, right? Your individual cost is going to be that makes up that. Okay, fine. And then now so we say here expensing research. Okay, and then now what we then do as well now, we say in respect now of the development, in the respect now of the development cost, because remember the development cost, we're going to recognize now this amount in our statement of financial position. So we're going to say the on-take cost, we're going to say internally generated, you can write in full intangible, right? You can write in full on yourself, on your own. And then we can say, and then we include then all the various components that we have in here, which is the salaries, depreciation, as well as your consumable, right? Fine. So the on-take cost, okay, this will be in your statement of financial position, and the rest will be in income statement. Now, so your on-take amount then is going to be 639, right? And then here you will then have all these other components here that you actually recognize here. So those are the components. Okay, and then you can say capitalizing development costs, or recognizing, whatever you call it, capitalizing development cost, internally generated intangibles. So that's how your journal entry would have looked like, right? Fine. Now, remember we said this is what you're going to capitalize, right? So now, So now what happens is you have your cost now, right? So in terms of the note that they ask for, where is that intangible note now? Intangible note. Okay. Fine. So now in terms of that intangible note that they ask for, why can't I move now? Why can't I move? Why can't I? Okay, let me just close quickly. I'll come back just now. It's just frozen. I'm gonna come up just now. Okay, so what we're going to do now is we're now going to do the note quickly. But I'm just waiting for this thing to come up quickly. Okay, that's fine. Okay, I think it's up now. Let's just see. Okay, there we go. Okay, there we go. It's up now. Fine. Now, remember for this internally generated intangible, this was acquired during the year, right? So you would not have had a, let me just confirm quickly if that's the case. When was it acquired? I'm going to go back to the scenario quickly. Yep, so this was acquired at the beginning of the year. Sorry, in the current year, which is 2011. So beginning of the year, the opening balances would have been nil because at that point in time, there was no specialized machine. Sorry, there was no patent because you only completed this patent now in the current year, which is 2011. Fine. Now it's frozen again. Fine. Now what happens is we then had a cost that we've determined of 639 something. Right. Now we need to amortize this specific intangible asset. Right. So when we need to amortize this specific asset, we know how long we're going to have this asset. So if you go to the scenario, they're telling you then the scenario that we intend. Okay, sorry, I'm talking about the patent now. Sorry, I'm talking about the patent. I'm talking about. So we intend. So the useful life of the patent is how long? It's going to be 15 years, right? Fine. Now, if we go here, not this one. Here's a patent now. Where did I do the capitalization? Okay, yeah, fine. So now we say that, so we've capitalized that amount, right? And then there is no residual value here. So we're not expecting to get anything after that 15 years. Fine. So we can then calculate as to what depreciation is. So we say the cost that we've capitalized over 15 years. So we should get, this is not right. Just want to see. So the useful life, the patent's useful life was estimated to be 15 years, and the residual value on the patent is how much? The patent is 0. Okay, so how much did you capitalize this thing with? Is 639. What am I doing wrong? I'm just going to the scenario quickly. Yeah. Okay. So the depreciation per annum is gonna be 42, right? But now remember, we've only used this now for 5 months, meaning that now we need to apportion, right, that amount by 5 months, okay? Because we didn't have it for the full year. Because remember, we only started, so the development was only completed in here, right? So meaning now to have the fully intangible started in here. So in the current year, we only have it for 5 months. So now the depreciation per annum, we then need to apportion that only for the 5-month period. Portion 1 to 5. So meaning that now we only have to recognize, we only need to recognize now Oh, this thing keeps on freezing. I'm sorry, guys, about this. So we only recognize part of that depreciation only for 5 months, okay? I'm just waiting for the screen to come up quickly because this thing keeps on freezing. But anyway, okay, so 5 months, okay, there we go. There you go. So there is the 5 months, so which means now 17,784 we must then recognize. So there is a 17,784. Let's forget about this part for now. Okay, let's forget about this part for now. Fine. Now, so meaning that my carrying amount at the end of 2011, it's how much? It's 621, right? But now, in your scenario, there is a further statement in page, that's in page 17. On top of page 17, it says that on 31st of December 2011, management decided to sell the patent as it was not making enough income as we initially anticipated, right? And then so we expect now the sale to be completed only the 2012 financial year, and then we expect to receive cash for this, right? And then so they're telling you that all the requirements to comply with IFRS 5 to classify this asset as held for sale have been met, right? And then the fair value less cost to sell this patent on 31st of December 2011 was then determined to be 400,000. So it means that now we can no longer hold this item as intangible asset. We now need to transfer this now to IFRS 5 requirements, right? So this item is sitting in the carrying amount of 621. So we need to take it out as PPE because it's no longer PPE, meaning that at the end, PPE should be sitting at the value of 0. Right? Okay, so I think we're still together with everyone. We're still together with everyone, that's fine. Now, your journal entry would have looked like something like this, right? Okay, so we would have said, we've got, I'm just going to write it in short now, IFRS 5 asset, so non-current asset, non-current asset held for sale divided full, right? So we're going to recognize this at cost, okay? So currently the asset is sitting at, I think, is it 639 or something? I think 639. Where is the? It was sitting at 639, but now remember also we then took depreciation. So the item was sitting now at 621, right? Just do that. Okay, and then remember initially there was accumulated depreciation that was recognized here, and then we need then to take out the cost. So I'm going to say internally generated intangible at cost. The cost initially would have been 639, I think, if I remember correctly. That would have been your cost. And then therefore your difference between these two would then have been your accumulated depreciation, which is the amount that you've recognized for depreciation. Okay, so this would have been in a SFP. Okay, sorry. So this would have been SFP, same as this one, and then same as this one as well, because we now need to take it out under intangibles, and then any depreciation that was previously recognized must be taken out, and then now we recognize a new plant or sort of a new asset under IFRS 5. Okay, yeah. Okay, so the initial cost was 639,658, and then the depreciation that was written off over the time was now 17,768, and then what it's worth now, which is the take-on value for now, the IFRS 5 non-current assets now going to be the 621, right? But now there is now a spanner into this now that at the same date, which is the 31st of December, we've actually determined that the let's say the fair value less cost to sell of this item was 400,000, right? Meaning that now it appears that this is now overvalued in our books, right? Meaning that to some extent now we need to impair this item, right? Fine. So we're going to say so it's going to be impairment. Or let me first do the impairment quickly. Let me first do the impairment. Where is it now? Payment. Well, this one. But okay, so now we say now that is the value, right? That we now recognize this in the financial as per the journal entry that we've done, right? But now we're saying that now we know that it is impaired, right? Now what we need to do is remember what we said is that impairment is going to be your carrying amount. So it's going to be your carrying amount less your recoverable amount, or your recoverable amount less carrying amount, whichever way you do it. And then now your recoverable amount, how we determine that is going to be the higher of your fair value less cost to sell, as well as in terms of your value in use. Fine. However, now the question does not give, or this, let's say the scenario does not give us now what the value in use is, right? But we do have what is the fair value less cost to sell, right? But what I want you to do is, so in your solution, so in your exam script, you will still say, fine, so my recoverable amount, right, is going to be higher of 1, fair value less cost to sell, or value in use. We don't have the value in use, so we don't have the value in use. We can say it's nil, or we can say not provided, or rather put nil, right? And then we say our value in use, our fair value less cost to sell is going to be 400,000. Okay, they've given us 400,000, and then we can say our impairment then is going to be, so therefore our recoverable amount is equal to 400,000. That's our recoverable amount, right? Fine. Now we need to determine now as to what the impairment is. So the impairment is, we have our carrying amount, right? 31st December 2011. I think it's 621 something. 61398. Right? And then our recoverable amount is going to be the 400,000 that we have now, right? Meaning that now, how much you're going to impairment is going to be. So we need to write this asset down now from the carrying amount to what is available in the market, to the recoverable amount. So that less that, right? Then we need to write off, just need to confirm the carrying amount quickly. 621,889. 621,889. 621,889. Okay. Now, so we need to write down this asset with 221,889, right? Okay. Now, just want to see quickly what we haven't yet addressed, right? Okay, I just want to see, I'm just going to the required quickly. So your disclosure note in the required, the disclosure note for non-current assets held for sale for the 31st of December 2011 note, it will also be pretty straightforward in this regard, because there is not much information that you can actually include. So I think it's mostly the mostly the narrative part that perhaps one would include in there. But I think in the scenario or in the solution is well documented in terms of what that note will look like, right? Okay. Now, just want to check quickly the journal entry that would have done. So okay, let's just do the journal entry. 16 is this right? 621 17. Okay, that's fine. Okay, so they have done some. I'm do the impairment. So the impairment journal, the impairment loss, then accumulated impairment loss. Okay, and then what is that amount again? So that amount is, I'm just showing you the journal quickly. 221889. So it's 22189. 22189. Okay, so I think the entry here must be because we will now decreasing our let's say investment here. Yeah, so that should be the corresponding journal entry in this regard. Okay. And then your narration could be recognizing impairment loss on the first 5 investment, whatever you call it, right? And then I think there is a journal entry perhaps that I think I didn't touch on before we conclude. And then that journal entry relates to, I think it relates to this one. Remember that asset that we bought on, so partly of that asset we bought it, paid 1.1 million. And then partly in that asset we then bought it for, there was a financing component, right? Okay, so what also we need not to forget is the dates on our journal entries, because I think I've completely missed that here. The dates are very important. So it's the same, and then here it would have been 31st of December. Okay, and then here would have been the 1st of August. Remember the dates out of my head. Fine. Now what I want to do is I want to do now that journal. So that machine, we bought it on the 1st of February, 1st of Feb, 2011, right? So you're going to say machinery. Just want to see who's asking a question quickly. Yes, okay. So we say machinery, okay, SFP. The machinery SFP. Okay, I think you should know this by now. And then there was an interest paid portion, right? And then there is now, I think there was also the bank. I think there was bank in between in your SFP, and then there was I think trade and other payables, because remember that 900,000 you're going to, it was a creditor that you need to pay 1, 2, 3, and then so we paid bank 1.1, 1, 2, 1, 2, 3, right? Just wanna make this right so that I can see. Now remember, we already have this value here, right? This value we can get it from here. Is that 1894? 1894, right? And then here the interest paid will then be the balancing portion, that, and then less that. So it will be the balance between the two, because it needs to be 2 million altogether, and then that should also be 2 million altogether. That will then be your balancing portion. So that's how the journal entry would have looked like as far as this is concerned, right? What else did I want to cover? Let's see. Yeah, please just go and look at the note for impairment loss. It's a narrative aspect in this regard, and you can also look for the note in terms of the non-current asset held for sale. Because I think current is only the narrative part that's there, and it's well documented within the scenario. So I just want to see what else I wanted to look at. So basically within that note as well, on your non-current asset held for sale, you actually say that what they did in terms of disposing now of the patent, and then now because it was not giving us enough income. So and then you say that these guys, they expect now that the sale will only realize in the following year, right? And then so you say in terms of what this item is currently valued is currently in our books is sitting at 400,000. And then you also need to indicate in terms of how much of the impairment loss that we've recognized. But everything that I'm telling you now, you can actually find within the success solution because it's more of a narrative in nature. So remember, as we said when we're doing the other one initially, that we then need to indicate that we recognize the impairment loss in the profit and loss section of our income statement or in our statement of profit or loss and other comprehensive income. Okay. Just want to go back to the required quickly just to see if we've addressed everything. So in terms of required one, we've addressed the calculation of the impairment loss. We've addressed in terms of the disclosure, the note for impairment. We've also addressed the calculation of what cost to capitalize. We've also addressed the number 4 in terms of doing the disclosure note in terms of IAS 38 now, and then as well as the transferring now of that the patent they sold into now non-current asset. So we've actually done everything in here, and I think that's about it. If you guys don't have any questions, then I think I'm gonna leave you at this point. Right? What is your tips on how to approach the type of questions? Your question is very broad because Arnold, your question is very broad because I think each question is dependent in terms of what is being asked, but the basis or the start point is you first read your scenario to understand what is happening, right? Because that will also then assist you when you get to the required to say, okay, at least I know what's happening. Now, the moment you get into the required, you know already what's happening in your scenario, right? So your required then will then force you or then triggers you in terms of what frameworks you need to do, right? Because you understand perhaps in the scenario, like in this case, that there was a patent that we had, right? And then the second one was we've developed a patent internally as well, right? So meaning that we would have went through the research phase and then through the development phase up until a phase of now this is completed now. So your required would then, so as part of answering your required, your frameworks would then have to include as such, right? And then, so now when you go back, so when you're done with the frameworks, you go back now into a specific sort of type of scenario, because if you look at it, how we answered this, we never went back and forth. We went to the first one, patent, right? We addressed that whole thing, then we moved on, then we went to the internally generated patent, then we move on, and then we went now into the IFRS 5. Now, if you're going to go back and forth in the information, you're going to waste time, and then you're also going to confuse yourself. So you need to have a systematic approach. I'm not saying adopt what I'm saying adopt. Just have a systematic approach that works for you, right? If they want to say that, let me deal with number 1, scenario 1 first, and plot across all the required. Scenario 2, plot across all the required, and scenario 3, plot across all the required. If it doesn't work for you, then you must try and find something that works for you. But in terms of how I did it here, in terms of plotting all my frameworks, because I know what the required ones, I've read the scenario, what's in there, I know what it is, what to expect. So let me plot all my frameworks or all my skeletons, and then I go back to each scenario or to each part, which is the first one was your patent, and the second one was the internally generated patent, and so forth, and then plot across all required. So it's been a method that worked for me even while I was a student, and I'm doing no differently this time around. So if it works for you, you can adopt. If it doesn't work for you, then you need to find something that you're most comfortable with, right? because this way you're able. Let's say in this example, so I just want to share quickly this. I just want to share the scenario again with you. Just want to show what I'm talking about. Yeah. Okay, here's a just go down quickly. Question 2. Fine. So now here's a scenario here. So let's say, for instance, you would have addressed this part here. You would have addressed also, let's say, this part here, and then when you perhaps needed to get, let's say here, you would have perhaps run out of time. However, what would have been nice is that most marks that would have been laying in these sections here, you would have already accumulated those marks, right? So this technique is all about getting the quicker, your easier marks quicker. And then when you run out of time, you at least know that I have at least addressed majority of this question. Right? And then here, I don't think there were many marks that were actually laying in this part here, because most of them are actually sitting here above. Okay, I think that's about it. If you can just complete for me the evaluation questionnaire, and then as well as the attendance register, then I would appreciate that. So I think up until tomorrow, I think this is it for me. And then thank you very much for your participation. So if you perhaps have any questions, then we perhaps also can, let's say, first 5 minutes or 10 minutes of the session deal with those questions as well. So I think you go back and then practice this question. You also have solutions in the tablet as well. So you can also use that to actually sort of gather an understanding. So yeah. But yeah, I think that's it. So I'll send you this sort of what I've done my solutions on, but it should be pretty much the same in terms of, but my ones are longer because I just wanted to show you how you actually get to those answers. So tomorrow we're on at 12. We're on from 12 up until 1:30, if I remember correctly. Yeah, I think 12 o'clock up until 1:30 tomorrow. Yeah. And then also you can read through the question that you're going to do tomorrow. I think this question, let me just check for you just now. This question is going to be question. Okay. Sorry, basically tomorrow's session was aimed to continue with this question if I could not finish. Yeah. Let me decide tonight, and then I'm going to inform you guys. They will inform you via an email. But now, if you check on the schedule, the schedule made provision for the 2nd of October, which is today, as well as for Saturday, the 3rd of October, which is tomorrow. Now, that provision was with the sense that if I could not finish question 2, because if I could not finish question 2, then we're going to have a session tomorrow. But I will advise before the end of tonight regarding tomorrow. But the timing for tomorrow is 12 o'clock up until 1:30. Yeah. Okay. I think that's about it from my side. Yeah. Look out for that email, and then that's about it. Thank you, and then cheers. Claudine?